Hey guys, welcome back to my YouTube channel. It's a new week. This is the week Sunday 8th of January. So I just want to give a quick recap on the Forex market analysis things that we're looking at. I'll actually just be looking at three pairs just to help us have an idea of the market. I'm currently doing one of these funded challenges, so I'm trading Forex at the moment, so regularly. So I wanted to just share my experience as we go right along. So the three pairs I'll be looking at will be one USDJ PY, that's US dollar Japanese yen, pound USD, and euro USD. So for USD JPY, okay, now if this is your first time on the channel, please give us a like, subscribe, and please go through the video. If you have thoughts that you'd like to share, drop it in the comment section. I really like to know your thoughts on this analysis thing. I'm just starting. This is the first time I'm doing it like this. I'd like to know people's thoughts on it and if I should continue with it. So let's get right into it. So this is USD JPY. So let me go to the weekly chart. So on the weekly chart, the key thing is this particular week on the weekly chart just broke. Now let me zoom out here so you see something I noticed, because I just went through them, then decided to share the thoughts I had. You can see that on the USD JPY we have a trend that is just going up, an upward trend. So now this trend, for those of you that don't know maybe how I trade, the way I trade, I make it very simple. I trade trends. And basically, I just look at the charts and see those trends quite easily. A trend is very simple. Higher highs for a trend going up, and the higher lows for a trend going up. That's for a bullish trend. Why for a bearish trend, you talk about lower lows and lower highs. A typical example is what we're just looking at on our screen for the USD JPY weekly chart. What it has been experiencing is what you call higher highs. You can see if we start looking from here, we have a rise, a retracement, and this high is higher than this high. Then we have a retracement, then we have a high that is higher than this high, a retracement, a low that is higher than this low. Then again, it goes up, a retracement, a high that is higher than this high, a low that is lower than this low. It goes up, a retracement, then we have a high that is higher than this high, a retracement that is higher than this and this. So you have higher lows, this is a low, higher than this, higher than this, higher than this. These are highs. So this high is higher than this. So this is a bullish trend. That's just the interpretation of a bullish trend. You understand? The highs are going higher. So there's what you call break of market structure. That means a situation whereby the trend is broken. And the example in this case is just very simple. If you look at the trend, this was a high, a retracement, a high again, a retracement, a high again. This high is higher than this high is higher than this low is higher than this low. Now we had a pullback. Now normally this pullback, just like the others, will pull back to a certain level but won't break this low, the previous low. Just like you had this one. Pull back, but it didn't break this low. Pull back, it didn't break this low. Pull back, didn't break this low. Pull back, didn't break the previous low. But in this case, the previous low broke the low. It pulled back and broke the previous low, and it happened in this very week. Meaning that this bullish trend on weekly chart for USD JPY has been broken. So what does that mean? That's very simple. It means that for now, on the weekly chart, we can no longer say that USD JPY is still bullish. So now it hit that level and retraced, and that may be the reason why in this particular week we saw USD JPY buy massively out of nowhere. You understand? It was reacting to a support level on the USD JPY weekly chart. So when situations like this happens, It doesn't just mean that, okay, it has broken a low, broken market structure of a bullish trend, so you should start selling. What that usually means is this: if market structure in a particular direction has been broken, you need to wait for a new trend to be formed. What this means is this: yes, now weekly chart, before you can say on weekly level, on weekly chart, the market is trending low. You need to wait and see that this trend becomes something like this. That is, you now have a low, goes up, pulls back, comes down, pulls back, comes down, pulls back, comes down, just like that. Then you now know that you're having a trend that is bearish. I hope that is clear enough. So with that being said, let's go to the daily chart. So of course, even though on the weekly chart we're having a pullback, which now broke the level, on the daily chart, even though on the weekly chart the overall trend is bullish, but on the daily chart we're having a pullback. You understand? And that pullback formed a trend on daily chart that was bearish. Now, if we look at it, it's quite clear. Just like what I was saying to you, that the kind of thing we're going to have to wait for on the weekly chart before we say that, okay, we have a clear trend on the weekly chart for sell. This was what was happening on the daily chart. We had a down, a pullback, a trend again, a pullback. So you have lower lows. This low is higher than this low, meaning that the lows are getting lower, while the highs are also getting lower. So you have this high is higher than this, higher than this. Unlike in a bullish trend, you have the highs getting higher. I hope that's quite clear. So in a downward trend, you have this up, down, up, down, up, down, up, down. Now, just like what happened in the weekly chart, the same thing kind of happened. The same thing kind of happened. Yeah, let me just delete this. This was what I was using before the week started, but clearly that has changed because we have a new low. So I'll just delete that. So we had a pull, a down, up, down, up, down. So normally this was a pullback, and I supposed to maybe just stop somewhere, then continue low. But in this case, the pullback went up and broke the market structure. So the trend, the daily selling trend was broken. So in the same week, on weekly chart, the bullish trend overall structure was broken. Then on daily chart, the overall structure of bearish trend was also broken. So what this means, this kind of situation it creates a tricky situation. It means that we may have a situation whereby we have a retest on both levels, meaning that there's a good chance that the market on this daily is going to go back up here and retest this level, this high that it broke. It's going to retest that. If it breaks structure, there's a good chance that it may now start forming a new structure, which is now bullish. I hope we get that. At the same time too, for the weekly chart, it also means that it may also come down and retest this low. So in such a situation, it can really get tricky because the market is not trending, meaning you can have a choppy situation. So I would say that it's best in this kind of situation to just wait until you have a trend again, till you have a clear trend again before you start taking trades, at least on the daily chart. So this week is likely going to be a week you just wait it out for the USD JPY. Okay, so that being said, let's go to the pound USD. That was my favorite currency for this week that just passed. Okay, so for the pound USD, let me go to the weekly chart. You can see that on the weekly chart for the pound USD, we're having a trend, a downward trend for quite a while. But some weeks ago, that trend was broken when the market rose and hit that level. So meaning that the weekly trend downwards, that structure was broken. Now, we cannot say that, okay, the weekly trend for USD is now bullish. Not yet. But we'll have to see a structure, which is like the way it pulled back and broke. We'll probably have to see something like up, down, up, down, up, down, up. Then we know that we are really in that trend, just like we clearly see in the way it was trending down. Yeah, up, down, having lower highs, lower lows continually, lower lows continually, Now, there's also something, the complete decline, we take it from the highest level all the way down, you can see that on the weekly chart for this decline is actually around the 50% level. So you can see this hit, the pullback that it did towards the 38 level could have been anticipated. However, there's usually a chance in retracements like this that the market may actually go up to the 61 level. But let's not disturb ourselves with that yet. Let's just go to the smaller time frame and see why like in the coming week, like I said, this week that just passed, this pair was very profitable for me because I was selling it. And the reason is this rise up on daily charts was already clear. Even though on weekly chart it was not clear as a trend, on daily chart it was clear as a trend going upwards. Now I saw that, and then I kind of took advantage of it. Now it was going up, 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 up. Then some days ago it came down and broke the bullish structure. So when it broke that bullish structure, I noticed that after some days it actually formed a trend. It declined, went up, declined, went up, and declined. So that to me was a trend already. Remember, it had already broken the bullish structure by coming down and breaking the level here. So I'd already somehow subtly seen the trend here. On daily it was not too clear, but on H4, and I went to H4. Let me zoom out. When I went to H4, I kind of saw it clearer. You can see, even though it looks choppy, but it was actually a trend. So that's why in this week that just happened, I was regularly selling on the pound USD. Now, after non-farm payroll on Friday, this rise happened. I didn't trade on Friday at all because of the non-farm payroll. I just left it out. So, nonetheless, if you look at what has happened so far, you will see that right now it's as if it wants to break structure. Now, this this rise here that we'll see as the price coming down and hitting this level here, as we see, may be considered a break of structure for pound USD for 4 hours. So there's a good chance that on 4 hours the structure has already been broken. Nonetheless, even though the structure has been broken on 4 hours, on daily time frame, that structure hasn't effectively been broken. And I will tell you the precise level that it will need to be hit before you call it that it has been broken. The precise level, let me zoom out into it. The precise level will be about 1.21258. That's about 1.2126 approximately. So if we have this daily chart, maybe when the market opens, it goes up and breaks this level, then we know that on daily chart, a break of structure has also happened. So what do we do in such a case? We can now start watching on 4 hours. We may allow some time to pass and wait for 4 hours for us to see maybe something like a pullback up, another pullback before we start looking at buying. You understand? We want to see a trend upwards on 4 hours before we want to start taking any buy trades for it. You get? So I won't advise that on Monday you just jump in and maybe start buying or selling. I think you should wait for the market to do what it needs to do. Probably Monday, Tuesday, you have a clearer idea, then you can start trading period on Wednesday. That's what I think. Now, this is just my idea. It's not considered as financial advice. These videos are made purely for educational purposes. So lastly, let's go to Euro USD. Okay, Euro USD, going to weekly chart. On the weekly chart, Euro USD some time ago already broke the downward weekly structure. On weekly it was actually trending downward. So you can see some weeks ago Euro USD actually broke that selling structure. So, and since then it has continued trending upwards. So Euro USD is actually on a trend upwards. If we go to daily chart, you can even see that daily chart that it has been on a trend upwards. I hope you can see that. Now it pulled back greatly on within this coming week, but it did not break structure, because you can see that this pullback here, when it went up, it didn't break the new high. So this whole thing here, this down, up, down, it can still be considered as within a retracement. It will have to have come down and broken this level, the 1.04430, before you say that it had broken structure, which it did not, despite that pullback. So for Euro USD, one may still be expecting it to go up to this high. However, the distance between the real stop loss, which is supposed to be here, 443, is quite a distance, because right now it's on 642. So that's almost 200 pips stop loss, while the take profit level, or the potential take profit level, is just about 90 something pips. So the trade is somehow. So if you want to take such a trade, except you're not using the real stop loss that's supposed to be, probably just using 90 pips take profit and maybe 90 pips stop loss, something like that. You can also do that, but just like the others, I would advise that if you must take Euro USD trade, I would advise that you probably want it to pull back. You understand? You probably will want it to pull back so that you have a good chance of a one-to-one ideal trade. Right? You want it to pull back, let's say, another 50-60 pips. Yeah, 50-60 pips. So that becomes one-to-one. If it drops to about 600, to about 580, then you have stop loss at 440, then take profit at about 740. So it becomes kind of like equal. So you want about at least a drop of about 50-60 pips, then you can take profit. So at 1.0580, you have a one-to-one. So if you're taking a buy, then you know you're risking one-to-one at least, because actually it could, this is just speculation analysis. It could actually go all the way down and go and break that level. So just buying at as it starts is not wise. You want a good decline before you start taking buys. For now, Euro USD, the trend is still buying. On 1 hour and on 4 hours, you may not really see the clear trend, because on those time frames it's so choppy. You understand? It's so choppy. It goes up, comes down, goes up, comes down, goes up, comes down. That going up and come down, the truth of the matter is actually opportunity for traders to make a lot of money, especially those that know the real direction. So they could scalp on it in the real direction while maintaining the one-to-one situation, continually. You get it? So you just imagine someone that knew that, okay, that the real stopper was supposed to be 4 for something. When it was pulling back down to this level, people could have been taking short buys, short buys, and it goes up a little, takes profits, pulls back again, enters the buy. When it goes up again, takes profit, just like that. I did a lot of that for the pound USD in the previous week. So please drop your comments. If there anything you don't understand, drop it in the comments. Let me know your thoughts. Let me know if this video was even helpful at all, beneficial. So drop your thoughts in the comments below, and maybe how you probably want me to improve on this video. So thank you so much for watching. See you in the next video.